Hey everyone, Nvidia stock got a rare downgrade from a Wall Street analyst on Friday, so I wanted to take a look at that report. I wanted to take a look at the comments from this Wall Street analyst, analyze it, and discuss with you whether or not I think this analyst is correct in downgrading Nvidia stock and in digging deeper into the arguments made by this analyst. So let's take a look at the details.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so New Street research analyst Pierre Ferragu downgraded shares of the AI powerhouse to neutral from buy in a Friday note, arguing that the stock appears to be fully valued. Now, this analyst hasn't necessarily turned bearish on the stock. The analyst has a 1-year and 2-year price target of $135 and $143 per share respectively, which represents potential upside of 6% and 12% from current levels. And understandably, if this is the price target the analyst has on Nvidia stock, it's understandable to downgrade it to neutral from buy, because if you're only forecasting a 12% upside in 1 year, then I can understand not rating it as a buy, because if you're going to invest in Nvidia stock for 12 months, you're going to want a greater return than just 12%. That's because you can get 5% on, if you just put your money in a certificate of deposit or a money market account, you're going to get 5%. So is an additional 7% enough to invest your money in Nvidia stock? Maybe, maybe not for some investors, right? So I can understand the downgrade based on this price target, based on this reasoning. So it makes sense from that point of view. But what about the point of view that the analyst highlighted earlier, suggesting that the shares are fully valued, meaning that, yes, Nvidia has excellent prospects, but all of those prospects are already incorporated into its valuation. So let's take a look at valuation. So if you're measuring by the forward price to earnings ratio, and you're comparing Nvidia with some of its large cap tech peers, and I've included AMD in there because of how closely related Nvidia and AMD are on GPUs, you'll notice that Nvidia is the most expensive when you compare with AMD, Microsoft, Amazon, Apple, and Alphabet. Right? Nvidia is trading at a forward price to earnings of 34.97. AMD is trading at a forward price to earnings of 30.9. Amazon is at 34.92, very close to Nvidia. And then you have Apple at forward PE of 31 and Microsoft at forward PE of 29, Alphabet at the cheapest forward PE of 22. By the way, I've got Alphabet rated as my top stock to buy because I think the shares are cheap at these valuations, especially when you compare to everyone else. But let's stay on topic with Nvidia. So you do notice that Nvidia is more expensive than any of the other large cap tech stocks here, but not by all that much. Not by all that much. Nvidia is roughly equal to Amazon, just barely ahead of Amazon in terms of valuation, and slightly ahead of AMD and Apple on valuation, which are both above 30, and then a little bit more above Microsoft at 29.77. But has Nvidia earned the right to be priced at a more premium valuation than these other companies? That's what I look at when I see a premium valuation. I don't mind paying more for a better product. Just like when you go to a store and you see something is a better product, it's going to be at a higher price than the lower priced product. But you ask yourself, is it worth paying the higher price for whatever it is, that product that you're considering? Sometimes it's worth it. You feel that the premium is worthwhile, and sometimes you don't, right? You make a value judgment in determining whether or not you're willing to pay that higher price for the better quality. And so let's do a little bit of that here. If we look at the operating profit margin of these businesses, you'll notice Nvidia is far and ahead better than everyone else. 59.84% operating profit margin in the trailing 12 months. Microsoft is the next closest at 44, Apple at 31, at 29, you have Alphabet, and then way behind them are Amazon and AMD. So if you're judging by operating profit margin, Nvidia is roughly 25% better than the next best, and that is Microsoft, and then almost double as good as Apple and Alphabet, and then way ahead of AMD and Amazon. So if you're looking at operating profit margin as one criteria to judge whether or not a company has earned a premium valuation, you give a check mark to Nvidia. The next metric, let's say if you look at cash flow from operations to sales, okay, and in that metric, Nvidia's lead is not as large, but it's still the best at 51%. Microsoft again at second place at 46%. Then you have Alphabet at 33, Apple at 29, 16 for Amazon, and AMD way behind at 7.46. So Nvidia clearly ahead of everyone else, 10% ahead of second place, Microsoft, and then 66% ahead of Alphabet and Apple, and then multiple times better than Amazon and AMD. Now, I'm not looking at revenue growth because revenue growth, Nvidia is so far ahead of everyone else, but those numbers I don't think provide very much information because Nvidia's growth numbers are so large, growing at 100, 200% year over year in the last few quarters, and that's going to slow down over the next couple of years. Still, Nvidia is likely to grow its revenue much faster than any of these other companies, at least 20% faster than any of these other large cap tech stocks. So now that we've looked at that, do you feel that Nvidia has earned that premium valuation, that it deserves to be selling at a more expensive valuation than the other large cap tech stocks? That's for you to decide. For me, I believe it has. I've had Nvidia rated on my list of top stocks to buy all year long. I still have it on my list of top stocks to buy. Now, I also have a lot of these other companies on there. I have AMD on there. I have Alphabet on there. I have Amazon on there because I believe all of those provide a good return for your risk for investors longer term. But I still like Nvidia on this list. I still think Nvidia is a really strong company. The analyst goes on to say that while Nvidia still has the strongest AI franchise among its competitor, a more prudent view on the stock is necessary after its year-to-date rally of 157%. And it seems that this is the area where this analyst is most focused on, is the price increase has been so large, so quick, that the analyst feels like there isn't too much room to run from here. However, one area I disagree is that the price performance has been justified by improvement in revenue, in profitability, and in cash flow. So when I see price increases of this magnitude, I'm also concerned. But when I look under the hood and I see that everything is working really well at Nvidia in terms of revenue, profit, and cash flow, then I feel a little bit more reassured. If I saw this kind of price rally and I looked under the hood and it was a situation like what's happening at GameStop, where the price is rising without underlying strength in the business, then I would be concerned from the price performance. But with Nvidia, you actually have foundational, fundamental improvement in the business, which justifies the increase in the stock price. It's not just a meme rally. It's not just a rally because it's popular. It is popular, don't get me wrong, but the business, the underlying business is strong. It generates great profits, great cash flow, as I highlighted, better than even the largest cap tech peers, better than almost every business. There's relatively few businesses that are generating better profit margins than Nvidia at this point, with operating profit margins close to 60%. So I understand this analyst's viewpoint. I disagree. I still think Nvidia stock is a buy, and I still feel Nvidia stock is undervalued. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe.